Well, good morning, David Kern here with the CBS Sam Debrief. It's Thursday, the 24th of November. Now, some of you might actually ask what is good about this morning, because we really have just a string of pretty negative data that's come out in the last 24 hours or so. Starting off in the United States, we had another durable goods orders figure that came out there, worse than expected, and follows a second decline that came in at 0.07%, following a September decline of 1.6. So pretty poor number there. Then we had Chinese producer price index coming off from 6.5 the previous month to 5%. So really indicating there that growth is starting to slow down in China. And of course, China was being held up there as the one, really the one bright spark, bright scenario, I guess, in globally for growth, and now that's coming off as well. Then, of course, we look at the situation in France, where they're going to be very alarmed at the prospect of losing their AAA credit rating. Partly on the back of this bailout of the Dexia, Franco-Belgian bank, and that, of course, has ramifications going through to the whole global banking scene, of course, as we know. And in fact, if you go to the New York Times and look for the Dexia's collapse, you can read some narrative there on the prospect that the similarities between this story and the GFC are starting to line up and look pretty similar. So talking about the rescues and the blow-on effect and so on, rather than just letting these things go. Next in line, we had Hungary. This is going back a couple of days now, saying only 18 months ago that they were okay, wouldn't need any help, but have actually approached the IMF and sought what sort of support they could possibly expect. So another one in the lineup here. We're almost at the end. Just looking at gold, it is suggested that John Paulson, the CEO of Paulson and Co, the fund manager who famously made a record-breaking record run of nearly $5 billion by going short the subprime mortgages market. He is apparently selling out of a lot of his ETFs, which is causing liquidation of gold positions and keeping gold here rather than it being bid up in the expectation of some of these problems that are occurring around the world. So that pretty much leaves us where we are there, and the markets really didn't like that much with the headline here, stuffing beaten out of stocks, but we have a day here of sixth straight day of falls now, and the Dow putting in another really big number here, 236.17 points, or 2.05%. The FTSE somewhat less, 1.29. Oil coming off a little bit, as it rightly should, because really up at these levels it does nothing to help the situation in terms of cost inputs, and it's probably a bit overdone. I think I said on Tuesday that the Iranian situation, there's a lot of saber rattling going on there, but hard to anticipate that anything will actually come of this at this point, and rather there'll be a slow squeeze put on them with trade sanctions to try to get them to acquiesce to the will of the global community and stop trying to build nuclear weapons. Okay, so let's have a look at the commodity space here. Pretty much right across the board, copper, grains, the whole lot, all a consequence of this perceived lack of demand globally that will reduce demand there. So copper at 1.75% down, gold $80 down, back below 1700. Silver $31.96. With the grains, it's probably really only the ones that are going up that I'll mention. That looks like cocoa, rough rice, putting in a fairly good showing there actually. And then big fallers being soy, down 3.45. Now these are pretty big moves here. Corn 1.69. And then we look at our currencies. We look to see continued US dollar strength here, with the euro buying just 1.3351, the pound buying 1.5528, the US dollar buying 77.3880 yen, the Aussie now at 97.11, US dollar buying 104.73 Canadian, and 0.9192 Swiss francs. So this really is the, just going back here to commodities for a minute, really is the silver lining in the picture here, because these reduced inputs will help stimulate the economies around the world, and that's really the one bright thing we can take away from the current situation. Okay, so let's have a look at the economic calendar, working a little bit all over the place this morning here, but there's so much to cover. Okay, so this is our Thursday. That was the durable goods orders number coming in at 0.07, 1.2 expected. Personal spending coming in at 0.1 when 0.3 was expected. So we really were starting to see some reasonably bright signs for the US economy there, but just when we thought we were sort of out of the woods, we get reminded that all is not well, and it's going to take a hell of a long time for things to turn around. Later on this morning we have New Zealand trade balance. Then we move into German GDP, and that reminds me, talking of Germany, they had a bond sale and it missed expectations there, so that was another piece of negative news. Business climate, and then similar data out of the UK around 8:30 our time this evening. Now let's move on and have a look at the Balkan trader here. This is how our local market is looking. Let's bring this up as an hourly chart, and we can see that since November 10, it's been a pretty consistent sort of a ride down. So we've lost 300 points there in the space of about 9 days. It's getting up towards 10% move in a little bit over a week. Aussie dollar coming off. I know that Jonathan in yesterday's report might have mentioned that he was adding to that short Aussie dollar position, so that's continuing to do pretty well. Just follow up on a couple of the stocks I've talked about recently. I know that on Tuesday I suggested that some of the coal seam gas plays could be worth a short in light of the recent government legislation that requires yet more scientific research, environmental impact, and could delay some of these projects quite significantly. If you were lucky enough to get onto one of those, you would have done okay. I didn't. But yeah, some reasonably good profits to be made there. Looks like about 10-15% if you had have jumped on that. The other one that I have talked about is in the retail space, which is Harvey Norman. Now, they did just come out yesterday and say they were going to start providing an online service, which they have said for some time they wouldn't get involved in, but finally decided to acquiesce. This trade's not looking real good here. Pretty strong support here at $2, but if it goes below that, then that trade is all over, I'm afraid. Okay, finishing off here, because I know I've covered a lot of material. I think that will do me for today. So look, if you are trading, good luck. Looks like going short is the way to go. At some point here, the value buyers will come back in. I think we're getting back towards that sort of level. We've got the Aussie dollar coming off, which is good for our economy generally, good for our exports obviously, and we certainly seem to be closer to the bottom of the trading range than the top. Key thing is to determine the timing to get back in. Don't think we're quite at that level yet, and we certainly have a lot of global headwinds here which are dominating the whole picture here. So it's all stuff you know already, but yeah, that's my view on it. So leave it there. Thanks as always for your attention. Bye for now.